All right, welcome to the Explainer. Today we're doing something a little different. We are plugging you directly into the digital heartbeat of the financial markets. Think of this as a guided tour of a live trading stream. You're getting a front row seat on a digital floor where, yeah, fortunes can be made or lost in the blink of an eye.
Yeah, that's a direct quote from someone right there on the floor, and you know what? It perfectly captures the energy. So let's just dive right into this chaotic, high-stakes world. We'll start with the calm before the storm. Every trading day doesn't start with a bang. It actually starts with analysis. We're looking at the morning of August 28th, 2025, way before the opening bell. Right now, traders are just scanning the horizon, trying to set their strategy for the day. And look, this setup is so key. It's the Thursday right before a long Labor Day weekend, and if you know markets, you know that can bring some really unpredictable behavior. On top of that, both the NASDAQ and the S&P 500 are basically bumping their heads against this technical ceiling. It's called R1 resistance. The night session was super quiet, so everyone's kind of holding their breath, bracing for a really volatile open.
So, on this digital trading floor, it's not like there's just one way to read the markets. Not at all. Traders are following different guides, and they have wildly different roadmaps. So let's meet two of these mentors, two really contrasting styles that are shaping the whole day's action.
So you've got two dominant styles really emerging here. On one side, there's the host. He calls himself a conservative scalper. Basically, he's aiming for a bunch of small, quick wins throughout the day. It's a style for people who like to be in and out, making lots of decisions. But then, a new mentor joins the floor. And he is the complete opposite. He's a position trader. This guy is hunting for those massive, high-conviction moves that might take hours or even days to play out. He might only take one trade a week, or even one a month. Total patience. And this quote just brilliantly illustrates the difference. The new mentor's philosophy? It is pure discipline. He'll give you the entry point, sure, but the risk management, deciding when to cut your losses, that is 100% on you. It's a super high-risk, high-responsibility approach that just demands absolute confidence in your decisions.
Okay, so what does this high-conviction style actually look like in the real world? Let's break down a live trade alert that went out on the stream. You're going to see just how insanely precise this kind of analysis can be.
So the mentor sends out this alert to everyone watching. And we're not talking about a vague idea or some general zone to watch. No, this is a laser-focused, specific price point where he expects the market to literally turn on a dime. And here's the call. He's telling everyone to short the NASDAQ futures, that's ticker NQ, at exactly 23,760. So, in simple terms, he's betting the market is going to run up to this very specific price, hit it, and then drop. And you better believe the entire floor is watching to see what happens next. And this is what happened. The market just screamed upwards, all the way to a peak of 23,755. Think about that. It came within just 5 points, which is a razor-thin margin in a market this volatile, of his exact entry price. And then it was like it hit an invisible wall and just reversed hard to the downside. Wow. The reaction on the floor was just immediate. For the traders who trusted that analysis and put their orders around that level, it was a picture-perfect entry. It's just a stunning, stunning display of reading the market's underlying structure. So you might be wondering, okay, how do these traders get the kind of cash they need to make these moves actually mean something? Well, most of them aren't using their own life savings. They use a really popular tool in the modern trading world called a proprietary trading firm, or just a prop firm. Okay, let's break this down. A prop firm is basically a company that will fund your trading career. It's simple. If you can prove you know what you're doing, they give you their capital to trade with, you get to keep the lion's share of the profits, and they just take a small cut. Honestly, this has totally democratized professional trading. It's opened the door for skilled people who just don't have a huge bankroll of their own. But hold on, they don't just hand you the money. You got to pass a test first. It's usually called a challenge or an evaluation. Here's how it works. First, you pay a small fee for an evaluation account. Then, your job is to hit a specific profit target, but, and this is a big but, you can't lose more than a set amount. If you can do that, if you pass the test, boom, you get a funded account with the firm's money. So the traders on the stream start talking about two of the most popular firms out there, and you can really see the key differences. They both offer these huge discounts to get started, but the devil's in the details, right? Take Apex. They have this really strict 30% rule, which means your single best trading day can't be more than 30% of your total profits for the month.
That consistency rule, plus a pretty high renewal fee after the first month, can be really tough for new traders. And that's exactly why you hear a lot of people on this floor saying they prefer bull knocks. The rules are simpler and the renewal cost stays low and fixed.
But, beyond all the charts, the mentors, and the talk about funding, the stream keeps coming back to what might be the single most important tool of all, and that's the trader's mindset.
This quote from the mentor, man, it just cuts right to the heart of it. Trading is a zero-sum game. It has to be. For every single winner, there's a loser. The market is just this giant arena of competing beliefs, and the one thing that separates those who succeed from those who fail is discipline. That's the armor. It's all about having a plan and executing it, period. No emotion.
And all of this really leaves us with one final thought to chew on. We saw a trade call that was, almost supernaturally precise. But at the same time, we saw a philosophy that fully embraces risk by taking away the safety net of a stop loss. And what that shows us is that even with the best analysis in the world, the final decision and the ultimate risk, that always comes down to the person clicking the mouse.